The investment pros were all here, including the capitalist pig himself, my friend making his first Making Money appearance, Jonathan Hoenig, founder of... Yeah, good to have you here, man. CapitalistPig.com, of course, a Fox News contributor. Our real good friend, New Oak Capital President Jim Frischling here to help us hash it all out. Jim,
and they weren't buying on the way up. I don't think they're selling it on the way down. I got a feeling they unplugged the phones in Jonathan's office.
Actually, I expected it to be more of a benign day and was surprised by the end. With no economic data, obviously the bond market closed for the Columbus Day holiday. I thought we would drift a little bit, so I was a little surprised by the selling. But tomorrow, I think, we got a big earnings day tomorrow, a lot of banks coming out. So when we talk about trying to find a bottom, watch some. If there's some good earnings tomorrow from JP, Citi, and Wells Fargo, talk about the economy, I think that's something.
And the financials actually held up really well today.
Yes.
They were down less than 1% as a whole, and a lot of them are trading up for majority of the day into the last 30 minutes. So that may be telling me something that maybe we're getting closer because of that.
Although the oldest axiom in the market, Jim, is buy low, sell high. Obviously, as we go lower and as more and more people throw in the towel, there will be some amazing opportunities out there.
I agree. And I like your point very much about how many companies are not talking down earnings, which we usually see quite a bit. And again, I think pay attention this week. Tomorrow, 3 of the 4 core 4 banks are coming out on Wednesday, the 4th one, B of A. And watch what they say. Are they making money on revisions to some of their holdings, or are they starting to grease the wheel? Like the banks or don't like the banks, the economy needs the banks to lend to help generate
And
business.
Intel tomorrow, too. That's a good sign for technology. If Intel's doing well, it means a lot of little guys are probably doing well also.
All right, now the Fed's balance sheet, which has swelled from $800 billion to $4.5 trillion, well, they're going to try to engineer some sort of a soft landing and revive this economy. Jim, for me, whatever the Fed is trying to accomplish, it hasn't been worth the risk.
I'm going to agree with you on that. I think they've stayed in this party, for lack of a better or overused cliche, too long. I think there was an element where they had to save the system, whether that was they could have done it a little bit better or not. That's irrelevant. They did have to step in. I think the continued pressure on keeping rates as low as they have been have really hurt savers. It has helped create the value in stocks, but at this point we're almost addicted to the Fed rates and monetary policies, and it's going to be hard to get off it. But again, I think they need to phase out. It is very difficult for the Fed to help on the labor side. They can help on the financial markets, but the economy is a different animal.
Although that's their dual mandate. Yes. Now there's...
So the Fed can't do anything. It's always destructive, whether it's intervention in ethanol, whether it's intervention in student loans, whether it's intervention in housing. It always ends in wealth destruction.
I don't want to be draconian, but I would say without the Fed's intervention, because the depositors, because of the removal of Glass-Steagall and the banks, investment banks, commercial banks, became one, we wouldn't have an economy. There wouldn't be a global economy without the intervention of our Fed and the central banks.
Because banks would have
there would have been a bank run, and there would wipe out. No money would have been lent whatsoever.
So there would have been fire and brimstone, and ATMs wouldn't have worked.
ATMs wouldn't have worked, but maybe not fire and brimstone unless it was set by.
Investors would have certainly lost money, but.
There would not have been.
He's saying depositors would have lost money.
Depositors would have lost money.
Well, they've lost any money now in inflation.
But to your point about housing, what I did want to say, the Fed, while it did want to stimulate housing, the rules and regulations on lending have been absolutely incongruent or adverse.
But I also think Fed money printing also tried to sort of nudge that virtuous cycle also. But some of them won't come back without the disease. Jim, last word to you.
Yeah, I mean, he's not the president that's played the most rounds of golf. He's not the president that has taken the most vacation days. But given the geopolitical risks that you're highlighting, I think optically he should be pulling back right now. So I agree with that.
It should be morning in America, and I'm going to take the lead here. All right, guys, just hit the word, though, retire. Now, here's the problem. We've got a lot of people 35, 45, 55, and they know they're on the wrong track with respect to retirement. They look at a week like this, Jim, and they'll say, well, I'm glad I'm not in the market this week. But they're fooling themselves, right? I mean, they're not being honest with the idea that if you want to have that great lifestyle, if you don't want to just sit back and watch TV and hope you get a Social Security check, you got to do a few things different.
I think that's right. And I think the shift in life expectancy that we're talking about has been dramatic even since the 90s. And yet retirement planning seems to be somewhat antiquated or even static to me. I think about this. We talked earlier in the show about the savers, because of low interest rate for the last 5 years, have really been hurt. Safe investments like CDs and money market funds returning nothing. So I think there needs to be a shift, not just to a greater percentage of stocks, but actually to blue chip dividend payers. You're going to need income. So there's Microsoft, Exxon's, J&J. You're going to have to make a more concerted effort to have A, stocks, but B, stocks that are paying you dividends.
Jim, numbers like that grow. One more patient, maybe outside of the medical establishment, maybe a neighbor, maybe a family member. Still questions on how this particular nurse could have gotten the disease with the right protocol. Do you see a point where we can obviously start to see it impact the economy? Now, movie receipts come in at an untypical low, atypical low, something like that?
I think we're ways away from having a material impact on the economy. We still have one death and very few illnesses. And until it hits the New York City subway, until it hits your Starbucks or McDonald's, I believe it's a lot of hype, but not a lot behind it. I think the other issues you raise, student loans, how it affects mortgages, the aging population, the deficit, unfunded pension liabilities, those are the things that are far more important, but I do understand Ebola
Can I
gets
put
the
it in
hype.
perspective?
Jim, tomorrow, banks. I'm not a big fan of the banks. I know Matt likes the banks. Where are you on these banks? Do you think they can rescue the market?
I don't know if they can rescue the market, but I do think that the banks are critically important to the market. I want to hear what they're doing in terms of what litigation expenses and stuff have they gotten behind them. What positions have they written down, or in this case, what have they written up? They are the grease that lets the engine go. Are they lending more? So I think it's very important.
All right, we'll see, guys. Hey, thanks a lot. Fantastic show, fantastic panel at home. We really appreciate you watching.